Good morning, ladies and gentlemen. Be welcome for the video conference from SYN for the discussion about the results related to the second quarter for 2026. This video conference is going to be recorded and the replay can be accessed on the company website at i.syn.br. The presentation also be shared and available for download. We mentioned that all the panelists only is going to watch the conference between the presentation. And after that, we're going to start the Q&A session that is going to be received only by typing. Before we move forward, I reinforce to you that these mentions are going to questions and assumptions from the scene board and the actual information that is going to be shared. Those declarations can risks and deletions that contain information related to the future moment. So depends for circumstances that can be or not happen. Investors, analysts is going to take that themes related to the macroeconomical for the segment and other factors can make that the results can be material different from those that is going to be expressed on the declarations and the prospection. It's going to be available in the video conference. Thiago Muramatsu, Director and President for C, and Hector Leitão, Financial Director and Relations with Investors from the company. We would like to take the order for Mr. Thiago Muramatsu that's going to be and start the presentation. Please move on, Mr. Thiago. Good morning. I would like the opportunity and the time availability to get the results meeting that I have here. And we're going to start here our presentation talking about what we're going to have in the second quarter in this start for the mall. So we have an increase later for the second quarter for 2025. Then you have 94% occupation to 96.2. The financial occupation, you increase it for half percentage point here. And just remind for you all that we have a decrease rate in the first quarter. In the first quarter here from 2026 because we have an area that have a few accidents on 2028 for this area for the city of São Paulo. Already been said, it's going to be right from July. Now we are running again in the 97% of the physical occupation of the mall. Moving forward for the sales, we have an increase in this evolution above the inflation on this period that we mentioned from 5.1%. Even with something the occupation a little more lower than we have in relation to the first quarter, we're going to have a good increase, and this reflects what the good work that we are doing related to improve the mix, to give new stores for our malls that have a sales over that is even bigger than they have, and the competition that they have for this increase during this quarter. Last and a half was for the same store sales, but the new stores add a good quantity increase, almost than 2% for the sales. And besides that, we are doing in our work for a few years that improve for the kiosk mix and events and activations that have inside the malls. And these represent an increase for almost 7 million on the quarter two. So our rent here, we have the same stores, even the same stores that have a few reduction here in this quarter. But looking for the previous 4 months, we are always running above the inflation that we have. In this quarter, we are a little more for the inflation, but it's still above. Move for the corporate buildings, we have a decrease on this quarter, especially when you look, sorry, for the class A pieces, and these reductions on the level of occupation was related also for the occupation that we have in Nova São Paulo. We have a lot of companies partially give the area back to us. So in comparison that we have for the buildings that we have, AAA, we increase on the trimester. When you talk for occupancy that we have from CO, Rio de Janeiro, is a building that we have a lot of challenges in there, but we are in the last year increasing the occupation. So from the previous year to year, we have an occupation from 40%, and now we are more than 60% that, and we are continuing to work a lot on this building. And talk a little bit about for the logistics warehouse. So we are talking that the last phase is going to be delivered. And fortunately, this warehouse is 100% rented. All the phases that we delivered, with exception for the second phase, all of them was 100% occupied. And now we have a price of rental here for the last phase very aligned what we have in the market, and you have a good perspective when you talk about the revisions that is going to happen on the next years. We have a few contracts that now in time to get a revision, so we have an increase, and they have the value to of the rental for this warehouse even on this year of 2026. I'm now going to move to Hector, move the Hector for the financial performance to you all. Good morning, you all. Well, according to the performance that we have for performance from the same property results here in incorporation that I have the same portfolio that I have, excluding the activities that I have, the change of the participation on the cases CLD, they have an expansion, operation expansion, a delivery for the last phases here. The portfolio of SYN had an increase for 10.5 in relation to the previous year. Now we have 48 million here on the malls here, splitting for the Masmeda malls, we have 35.3 million against 32.2 in the previous year. We have 90.6 percentage increase. In office, we have 13% of increase, having the result of 12.9 million. On the includes they have come from the recipe that we have here, the increase of this fee, and remind that we don't have certain business incorporation to have a like for like, but we take in consideration the real knife from CLD. We had a 18% increase here in relate to the previous year. Here, moving for the indicators, the financial indicators, the EBITDA, we have 27.9, very impressionate for the previous impairments that I showed to you. And also we have a license here for the expansion. We have different states here. It says we have a decrease on the FFO adjustment in relation to the previous year. We have from 25.6, now we have 22.1. And here, the main offender here is not the financial results. We have a cash flow here that was free, and now in the second semester here, we have in two different terms here. So they have the investors here. They have 350 millions at the end of the year, more 64 millions. So obviously, this cash flow here on the first semester is going to be lower than they have on the previous year. Even Dasher financial results have 19 millions here, less than you have in the previous year. Moving forward with that you have here, we close the second semester with the March that you have here, about 505 millions. We have invested 553 have, so we have total of that 48 million. So very well aligned with the previous quarter. And different that we have for the second quarter or the previous years that we have this cash flow more than 550 millions here in the company. So taking in consideration the adjusted EBITDA that we have for the previous 12 months for 94.7 millions, we close with about that 3.18 times related to EBITDA. An improvement related for the first quarter here it would be well explained for the increase of this EBITDA. And move forward, what we have for indebtedness pro forma amortization schedule that I have here. We have what we have scheduled in our cash and the cash generation here, cash flow generation until the end of the year. We have more 7 million for amortization for corporate debt, and 2026 more 26 million, half that corporate debt and half loans and finance direct for the buildings that we have. And then in 2028, you're going to have the highest tower that you have for amortization. Great part is going to be related to NPCA. We have a very scheduled to the financing of this debt, and during this period, we can organically minimize that, generate the cash flow for the business that you have in a way that we don't have this financing reconsideration for the 2020. Talking about the indexers here, we have 90%, a little more than have an excess that's connected to the IPCA index and to the PCA with 9.6%, and CDI we have 1.2. But here, so CDI, when we look for that for the CDA spot and the PCA for the previous 12 years, we have a that below from CDI. So 84% of our CDI, that's very, very good for us. And we have to maintain this debt profile, taking advantage here for something that is going to be positive. And this way, I'm going to close this financial meeting here. I would like to take word for Tiago Mutsamazzo to take the final considerations related to the company. Well, so to close that, I would like to reinforce the second quarter. We have to confirm that the path that we are adopted to increase the operation, even for the malls and the commercial parts and the substitution and requalification of the stores. And a few seconds later, we're going to move forward on the occupation that we have for that we have more challenge in here. And here on CLD, if I go to the cycle of important investment, we see that we have just collecting the results to see the collects. So look for a good way to have a good equilibrium and a good construction. I would like to thank you very much once again to all the team for your presence. And please have a nice day. The video conference for SYN it's now closed. Thank you very much for the participation for all of you and have a nice afternoon.